Welcome back to Explain the Charts, your go-to channel for comprehensive market insights. Today, August 14th, 2025, we're dissecting XAUUSD, also known as spot gold, a commodity that continues to capture significant market attention. Let's begin by looking at the broader picture on the daily chart, spanning from April 2024 to today, and connect it with the latest news shaping gold's performance. Recent reports indicate mixed signals, with FX Street noting that gold climbed to a two-week high above $3,400 earlier, while FX Empire suggests it's currently looking for direction above $3,340 support and has failed to advance. This reflects the ongoing tug-of-war influenced by macroeconomic factors. Goldman Sachs, in their October 2024 revised forecast, predicts gold could reach $3,000 per troy ounce by the end of 2025, a bullish long-term outlook. This positive sentiment is largely driven by a significant ramp-up in purchases by central banks, especially those in emerging markets, seeking to diversify reserves due to concerns like financial sanctions and U.S. debt sustainability. The current price, as of yesterday's close, is approximately $3,362.42, which holds above that $3,340 support level mentioned. However, investing.com highlights that hot U.S. inflation data shakes confidence in Fed rate cut expectations, a factor that often puts downward pressure on gold, given its inverse relationship with interest rates. Despite this, gold has shown remarkable resilience, often acting as a safe haven during geopolitical shocks and debt fears, as reinforced by Rai's Invest's perspective on its inherent scarcity and hedging role. Now let's zoom in on the daily chart data to analyze these trends and levels in more detail. From April 2024, XAUUSD has demonstrated a clear, strong bullish trend, rising from the $22.40s to recent highs near $3,400. This multi-month rally aligns perfectly with the narrative of increased central bank demand and gold's role as a long-term hedge. A critical resistance level to observe is the multi-year high reached around $3,499.45 on April 22, 2025, which closely matches the 52-week high of $3,500.13 reported. This level represents a significant psychological and technical barrier. We've seen healthy pullbacks throughout this ascent, which are characteristic of sustainable uptrends, allowing the market to consolidate gains before resuming higher. For instance, the sharp drop in early June 2024 from $2,376 down to $2,293, followed by a strong rebound, illustrates this pattern. These corrections often correspond to shifts in Fed sentiment or inflation data, as we just discussed. The key price levels to watch on the daily time frame are the recent peak at approximately $3,433 from July 22, 2025, and the subsequent support around the $3,280 to $3,300 area, which has been tested multiple times in late July and early August. Moving to the 1-hour chart, we gain a closer look at the short-term price action and recent volatility. Observing the period from July 25th through July 30th, we can see a clear short-term downtrend. The price fell from highs around $3,370 to lows near $3,285, confirming the fails to advance sentiment in the news and highlighting profit-taking pressure. This rapid decline indicates that short-term traders reacted swiftly to any perceived bearish news, such as the U.S. inflation data. The support around $3,280 to $3,300 proved resilient on the hourly chart, leading to a bounce. Following this, from August 11th to August 13th, the hourly chart shows a renewed upward momentum, bouncing strongly from a low of $3,341 on August 11th to close around $3,362 yesterday. This suggests that while there's short-term bearish pressure, the underlying demand for gold quickly reasserts itself at key support zones. Let's pinpoint a specific recent range on the 15-minute chart, looking at August 11th from 0:11 Universal Time Coordinated to 7 o'clock Universal Time Coordinated to capture intraday dynamics. Here, you can observe smaller swings within the broader hourly trend, moving from $3,388 down to $3,359. This micro-level detail reveals how quickly support and resistance levels are established and tested, often within a few hours. For short-term traders, identifying these swift reversals and consolidations is key to setting entry and exit points. The current 15-minute data from August 13th shows a sustained move higher, pushing past minor resistance levels, indicating current bullish momentum. Volume analysis can be crucial here. Higher volume on breakouts or breakdowns adds conviction to the move. If volume is low during a price move, it might indicate a weaker conviction behind the trend. So, when should you be bullish or bearish on XAUUSD? Long term, the bullish case is strong, primarily due to central bank accumulation, ongoing geopolitical uncertainties, and U.S. debt concerns. If gold consolidates above $3,300 and breaches its July highs around $3,430, we could see a strong move towards the $3,500 all-time high, with a 70% likelihood if central bank buying persists and inflation remains elevated, pushing real rates lower. The bearish case, primarily short to medium term, arises from strong U.S. economic data, particularly cooling inflation or aggressive Fed rate hike signals. A sustained break below $3,300 could see gold retesting the $3,200 level, with a 60% likelihood if inflation fears subside and bond yields rise sharply. A breach of $3,200 would then open the door to revisit the $3,000 level, as even Goldman Sachs foresees this as a long-term target, making it a critical psychological support. For traders, consider looking for confirmations on lower timeframes after major news releases. For example, a strong close above resistance on the 1-hour or 4-hour chart after a positive gold-related news announcement. Conversely, consecutive bearish candles breaking critical support levels on higher volume should alert you to potential downturns. Keep an eye on the US dollar index, as a weaker dollar generally makes gold more attractive. Also, monitor bond yields. Falling yields typically support gold prices. The upcoming U.S. presidential election and any escalating trade tensions could also significantly influence gold's safe haven appeal. In summary, XAUUSD holds key support at $3,300 to $3,340, with strong resistance near $3,430 and the all-time high of $3,500. Its long-term trajectory appears bullish, reinforced by systemic financial concerns and central bank demand. However, short-term volatility remains high, heavily influenced by U.S. inflation data and Federal Reserve policy expectations. Always remember to manage your risk and stay updated on global economic developments.